Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Okay, happy Friday everybody. Of course, it is not a particularly happy day for many of us within the Commonwealth and others mourning the passing of our fair monarch, a woman who faithfully served her people for 7 decades with grace and dignity. We hope, after a lifetime of service to us, you may now rest in peace. Now, for China Update, we have a lot to discuss related to the housing crisis. Indeed, this episode will largely be discussing the housing sector and wider economy. And let's begin with a tale of 2 developers. According to multiple sources, a lender has seized Evergrande's $1.2 billion Hong Kong headquarters after the latter defaulted on a loan and twice failed to sell the building. It's still not official who the lender is, but what we do know is that Evergrande was informed earlier this week that a receiver had been appointed to take charge of the property. The 26-story China Evergrande Centre, located in the city centre on Hong Kong Island. Evergrande had been trying to sell the property for months. However, would-be buyers, no strangers to how fire sales work, only submitted low bids. This isn't the first time Evergrande has had assets seized by creditors, but losing its HQ is certainly a high-profile and embarrassing example. It is certainly not going to ease bondholder concerns either. As Evergrande loses assets, investors, especially investors with secured loans, will become more anxious about their own interests and, like vultures spotting a mortally wounded beast, will begin to circle. We remember back in January, Evergrande told creditors that it would unveil a preliminary plan by the end of July this year to restructure its $300 billion of liabilities, including $300 billion of offshore bonds. But it failed to make this self-imposed deadline. The debt-ridden company has been trying to divest assets in recent weeks to raise funds, including, it was reported, by selling the chairman's private jet. This week too, Evergrande sold its remaining stake in Shangjing Bank for $1.05 billion. The investment in the northeastern-based bank had always been controversial for the developer. Evergrande divested its remaining 14.57% share in the bank through a public auction on a platform operated by Alibaba Group. The buyer and only bidder was a group of state-owned and private companies. According to Bloomberg analysts, Evergrande started building its stake in the bank in 2016 and eventually became a controlling shareholder. But, quote, as the developer's debt crisis deepened since late 2020, its massive transactions with Shangjing Bank also came under the spotlight, prompting a regulatory probe of more than 100 billion yuan of related party transactions, end quote. Indeed, long-term viewers of China Update, maybe 400 of you, may remember back in 2020 we covered how 40 billion RMB of financing exposure of Shangjing Bank were non-performing assets to Evergrande-affiliated companies. Evergrande was forced to sell its stake in the bank to meet a debt that it was ordered to pay by court order in July. However, the bank itself is also in trouble. In the first half of this year, net profits dropped almost 10% for the bank, and it had to apply for government support. Now, moving back to Hong Kong, like we said, this is not the first time Evergrande has seen its assets seized like this. We remember from earlier this year, California-based Oak Tree Capital seized 2 of Evergrande's assets after defaulting on several loans worth more than $1 billion. One of these assets were in Hong Kong, the other was in Shanghai. Now, the second developer that we need to discuss is Sunac China Holdings Limited. The property giant, which before the housing crisis was China's 4th largest developer by sales, is also facing a liquidation petition filed by a creditor in Hong Kong. In November, the local courts will hear a case from an individual creditor for winding up the company. In a statement, Sunac, which, like Evergrande, is trying to put together a debt restructuring plan for its massive liabilities, called the court petition aggressive and said that they would fight the case, which, quote, won't have any material impact on debt restructuring plans. End quote. Analysts say that we should anticipate more moves and developments like this. Quote, creditors of embattled Chinese property businesses are increasingly seeking court help on debt repayments. A wind-up petition was filed in June against Sunac rival China Evergrande Group, a case that's been adjourned until November as the company continues work on a restructuring plan. The previously mentioned vulture metaphor applies here too, as the world watches a massive game of musical chairs, if I may mix metaphors, play before our eyes. These creditors, like owners of unfinished apartments, banks, developers, local governments, and third-party suppliers and others, are now all worried that the music has already stopped. Okay, next up, let's follow several more key developments related to China's housing crisis. If you guys are enjoying this episode, don't forget to hit the like button. And for anyone who wants to go the extra mile and help me continue making these episodes for you guys every day, help keep China Update sustainable, Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much everybody for the ongoing support. State-run financial outlet The Securities Times published new data this week which found that among 50 cities being monitored, 47 cities have seen second home prices drop in August month on month. And according to China Real Estate Information Corp this week, China's top 100 housing enterprises recorded a 31% decline in sales in August year-on-year, a level, quote, nearly unchanged from July, end quote, and from January through August, sales have declined, crashed, collapsed, dropped, pick your verb, 48% year-on-year. Meanwhile, UK-based Japanese-owned Financial Times writes that China's biggest four banks have been hit by a more than 50% increase in overdue loans from the property sector over the past year, as, quote, the real estate market's liquidity crunch spills into the financial sector. End quote. The publication writes that China's top lenders, the Industrial and Commercial Bank of China, China Construction Bank, Agricultural Bank of China, and Bank of China, last week reported combined overdue property loans of $20 billion at the end of June. To say that China's Big Four are important institutions would be an understatement. They hold 36% of China's deposits and issue a third of its loans. Quote, the rise in bad loans from the deteriorating property crisis is worsening asset quality across China's 367.7 trillion RMB banking industry. Beyond bad debts, the banks have also suffered from weakening loan demand from their best corporate and retail clients as growth slows in the world's second biggest economy. End quote. In one Macquarie research note this week, an analyst expressed, quote, we see multi-year structural return on equity decline as banks retreat from the property sector amid stalled projects, mortgage boycotts, and heightened regulations. End quote. He then warns clients, quote, we believe the real exposure to developers could be much bigger than reported because they extended credits to the developers via proprietary investments and off-balance sheet credits like wealth management products, trust products, private funds, and private bonds. End quote. Beijing's recent demand that state banks take an earnings hit by offering lower interest rates to support home buyers and businesses isn't helping things either. The systemic risk of the housing crisis to the financial sector is a story which we have been following for some time and we will continue to follow here on China Update. And in the next video of China Update, we will be looking at developments related to the mortgage boycott also, as local governments begin nationalizing sectors to try and finish apartments for frustrated home buyers who are refusing to pay their mortgages. Okay, that is today's episode of China Update. Just a piece of housekeeping. There is a possibility that there will not be an episode of China Update tomorrow on Saturday. This isn't confirmed. There may still be an episode, but just giving you a heads up now that because of complications with my schedule tomorrow, it may not happen. Okay, thank you very much for watching, everybody. Have a wonderful weekend, and I will see you next time.